Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for coming on today.
Good afternoon, Devin.
Well, we see in the Federal Reserve's minutes from its latest meeting that it's concerned about the pandemic's impact on the American economy. The members also said they want more stimulus to come from Congress. What stands out to you in this meeting?
I think two things are important from the minutes from last July meeting. The first is coronavirus pandemic is still hurting U.S. economy seriously, and as you said, greater fiscal stimulus are needed. And the second is Fed will deploy additional financial tools to support U.S. economy, but they did not specify when they are doing this. So according to what U.S. Federal Reserve officials said, expansionary monetary policy will be continued longer than expected, maybe by the end of next year.
Right. Well, stocks on Wall Street were down a bit overnight. The same concerns about that outlook from the Fed. Also tensions with China, though. The Dow lost about 0.3%. What's the story in the global markets?
As you said, Devin, due to negative description on U.S. economy by U.S. Fed and concerns on continuing U.S.-China trade conflicts, U.S. market decreased yesterday. Dow Jones Industrial had a negative 0.3% return, and NASDAQ also decreased by 0.6% in a day. These negative views of U.S. Fed is also reflected on Asian market today. Nikkei, Shanghai Index, and Hang Seng of Hong Kong all had between negative 1% to negative 1.9% on daily basis today.
And another Asian market affected quite significantly today was the Korean market. The KOSPI dipping below 2,300 points, the KOSDAQ plunging yet again. Tell us about the domestic markets.
Along with all Asian markets drops, domestic market has a huge plunge today, which is almost, I would say, close to collapse of the market. The benchmark KOSPI dropped by 3.7% today, and KOSDAQ also dropped by 3.4% today. U.S. market drops in the previous day due to negative U.S. economic situation and newly accelerating coronavirus spread in Korea were two fundamental factors in today's drop in domestic market. So it is very important to pay attention to tomorrow's market because today's drop could be the beginning of longer continuous drops.
Well, you reference the potentially emerging second wave of the coronavirus in Korea. That's prompted talk about a fourth extra budget for the government. That's also brought up as a way of dealing with the recent floods a few weeks ago. But to what degree would yet another budget affect the government's fiscal soundness?
The longest monsoon and increasing possibility of the second pandemic make the time is right for supplementary budget. If we go for supplementary budget, it is going to be the first case in the last 40 years. But government fiscal situation is worsening quickly this year because tax revenue is smaller than before and fiscal spending is much more than before. Actually, in the first half of this year, budget deficit became 110 trillion won, and this amount is about 98% of government's budget deficit target by the end of the year.
Now, Professor, in recent months, we've seen something interesting. Korean households have been taking the opportunity of extraordinarily low interest rates to pour money into real estate and stocks. So there are concerns there about a bubble. What's going on?
The liquidity is increasing quickly due to central banks' expansionary monetary policy over the pandemic. But the problem is that people actively search for investment opportunities with this more money provided by central bank. So excessive liquidity becomes the source of bubbles in both of stock market and housing market. The liquidity measured by M2 amounts to about 1,565 trillion won in June, and it increased by 8% compared to the same month in the previous year, which is the largest in Korean history. So through implementing more business-friendly policies, this liquidity should be provided to corporations' investment and households' consumption.
Yeah, things are working out in an interesting way. Hope it works out well for everyone. Now, Professor, thanks so much for sharing your insights today.
Thank you very much.